You hear a lot about valuation of crypto assets, but what does that mean? And how do you do that? By the end of this section, you'll be able to apply crypto valuation techniques, use metrics to monitor the health of the blockchain ecosystem, and explain crypto asset mining. So let's begin talking about how you value crypto assets. And remember, crypto is an entirely new asset class. So what we're going to try to do is apply some of the same principles from other asset classes to crypto. And the first thing I want to consider is the difference between intrinsic versus extrinsic value. This is something that was proposed in the early 20th century by a famed stock investor named Ben Graham. And intrinsic value means value in and of itself, and extrinsic value is what the market perceives or projects on the asset. So it's important to consider when you think about crypto assets because some have utility value and some also have speculative value. Utility value is what is the crypto asset used for and what does it pay for, whereas speculative value is what does the market think it's worth. Now, think about this for a minute. Let's say you have a decentralized file storage system and there's only $10 million worth of decentralized file storage that's being used right now. However, the market might value your crypto asset at 500 million, which is 50 times how much is really used in the world. So in this case, the utility value is only 10 million, and the speculative value would be 490 million. And you'll see when we start discussing the other types of crypto assets and their values that many of them mostly rely on speculative value. So let's now talk about crypto asset valuations. Why do they have so much value? And I want to talk about a blog post that was written by a guy named Joel Monegro of Union Square Ventures a few years ago. And in this blog post, he described the value captured in the web. Now in the web, you can see the protocol layer is very thin. And by protocol, what I'm referring to is a way of doing things. So in the internet, the protocol could be SMTP, or Simple Mail Transfer Protocol, or ICTCP, which is Internet Control Transmission Control Protocol. And you may not have noticed, but these protocol layers really have no value. Most of the value that's been created in the web sits in the application layer. Think of companies like Google and Amazon and Facebook that sit on top of these protocols as applications and how valuable they are. Now the blockchain turns this on its head because for the first time we've developed a protocol layer that has different consensus mechanisms like Bitcoin and Ethereum and Litecoin, which are native assets to the protocol layer. So you've created economic value now in this protocol layer. And what that means is the application layer actually is really thin and it feeds into the protocol layer. So the application layer in the Bitcoin and crypto space would be companies like Coinbase and Bitstamp or exchanges like Bittrex. What these companies do is they're applications that sit on top of the protocol layer and they actually help it grow. The more customers that sign up for Coinbase, the larger the protocol layer where Bitcoin sits is going to grow. And so that is one way to think about why there's so much value in these crypto assets. So here's the main dashboard for Coinbase. You can see it's a very user-friendly layout. I would note that Coinbase offers FDIC insurance up to $250,000. So any funds you might have in US dollars are secure on Coinbase. And if you look at how Coinbase is laid out, it gives you the four main crypto reserves to buy: Bitcoin, Bitcoin Cash, Ethereum, and Litecoin. There's a pretty interesting chart functionality here where you can switch between different time frames. So you can see how Bitcoin performed in the last year, up $9,500 or 796%. It lays out your portfolio really nicely and also gives you a recent activity. Now, something that might be a little different between Coinbase and other and stock trading platforms are the Accounts tab. When you click on the Accounts tab, what you have here are wallets. And the wallets don't really hold your digital coins. They just hold your key. And that's basically that you have these coins reserved on that specific blockchain. And I'll talk more about that in future lessons, but just so you know, here on Coinbase, you get every wallet. If I click on my Ethereum wallet, I can see the transactions that happen in this Ethereum account, where I sent Ethereum to over the last month. So let me just click on the Bitcoin wallet and show you something. So in a date in the recent past, I sent Bitcoin to this Bitcoin address. And if I click on this, it tells me how much Bitcoin I sent, where it was sent, and then how many confirmations it's had so far. And what these confirmations represent are blocks. And this 1841 means that there have been 1,841 Bitcoin blocks created since I sent this confirmation. And the further back in the past that these confirmations go, the more secure this transaction is. Now, if I highlight this exact address and I copy it, and I go to a website such as blockchain.info, I am able to click on the search tab, paste that address in the search tab, and actually search for that wallet. So I can see the wallet history that's happened since this wallet was open. And you'll see here that here's the address, and here's the hash symbol. This is the basically notifies where this sits on the blockchain, along with other transactions. It's got 2 transactions so far in this wallet, and it's received 0.009 BTC, which is equivalent to about $100. So you'll notice that there's a history of every transaction that's happened in the Bitcoin blockchain. And if you have that specific public address, you can go see how many coins were sent to it or how many coins were sent out of it. And this is one interesting feature about the Bitcoin blockchain and any blockchain, is that there's a public record of any funds that were sent or received. So blockchain info is a very effective tool in searching for a public address that identifies a wallet on the blockchain. In our next lesson, we'll get more into wallets and exactly how they work and the different types of them and the different security features. Now, if developers are the brains behind the blockchain, miners are the beating heart. Now, miners are a decentralized network of computers that are solving computational puzzles for a reward in order to secure and validate truth. Now, in the Bitcoin ecosystem, miners are responsible for verifying and confirming transactions, and the health of them is measured by what's known as hash rates. Now, I'm going to look at a chart here of hash rates over a couple of years. And you can see back in February of 2016, the hash rates, and this is the estimated number of terahashes per second, which is trillions of hashes per second, started around 2 million. And it's grown exponentially over the last couple of years, and now we're up at about 25 million terahashes per second. And what this tells me is that the Bitcoin market, or the security of the Bitcoin ecosystem, has grown extremely more secure. Because in order to recreate this, you'd have to have as much mining power as already exists in the system, and buying terahashes per second is not cheap. So this is why Bitcoin is the most secure network or decentralized network that exists today. So we covered the developers, who are the brains behind the blockchain, the miners, who are the beating hearts of the blockchain. Let's talk about the users. Users are the stomachs of the blockchain. People like you and I who use these digital assets for real-world purposes. There's a couple ways to evaluate user health in a blockchain, and the first is transactions. If you're using a cryptocurrency, you want to see that people are freely spending it in the real world. Next, wallet growth. And this can be measured on websites like blockchain.info. You can see how many users have wallets and how many people are on that specific network. And lastly, merchants. You want to see that there's a strong growth in merchants who are willing to take your cryptocurrency in order to determine its health. So I'd like to quickly go over the confirmed transactions per day in the Bitcoin ecosystem. And this comes from blockchain.info. And one thing you'll notice here is that transactions in the Bitcoin world really have not grown much in the last couple of years. You had a spike in late 2017, but the amount of daily transactions has pretty much stayed the same. Next, blockchain wallet users. Now this is something that's shown very healthy growth in the Bitcoin world. In fact, it's growing exponentially. Just about every year, the number of blockchain wallet users doubles. In March 2016, we were sitting about 3.5 million. A year later, in March 2017, it had grown to 12.5 million, and then it doubled again to now in March 2018. So it's important to see that people are joining these networks to determine whether or not it's healthy. And lastly, this is a website called spendbitcoins.com, and this will show you all the merchants that accept Bitcoin. And right now, it estimates there's over 100,000 merchants that accept it. So you can use websites like these to see if your cryptocurrency can be spent somewhere. When you're talking about valuing crypto assets, there have been approaches that have taken other valuations in asset classes and applied them to the crypto space. And this is one of them. It's called the network value to transaction ratio. It was proposed by an early Bitcoin adopter named Willy Woo. And basically what you do is you take the network value of a specific protocol and you divide it by the dollar value of the transactions. And you can think of this like a price-earnings ratio. In the stock market, you might have a stock, let's say Apple, that's priced as $200 a share, and you have an earnings of Apple at $10 a share. So you would divide 200 by 10, and you get a price-earnings ratio of a stock of 20. You can do a similar metric with the network value to transaction ratio in the cryptocurrency space. And let me get into that. So right here, you're looking at a chart. The top price level is the price of Bitcoin over the last few years, and below it is the network value to transactions. Now, there's a couple key points to note here. One is that when network value to transactions gets close to this 100 level, there tends to be a sell-off in the Bitcoin market. The other point to make is that when it drops to about 50, it signifies a bottom. So there are some traders or investors who see value in the Bitcoin token when it drops to 50. And in fact, in 2017, there were significant sell-offs that took the network value to transaction close to 50, and these, in turn, became rallies in the price of Bitcoin. So if I line these up, here's the first one, which produced a rally. Here's the second one, which created another rally. Here's the third one, which led to another rally. And this didn't drop all the way down to 50, but there was also another rally. Now, when we had this super high in Bitcoin in late 2017, the network value of the transaction climbed as high as 175. And then since then, it's sold off. So most recently, the NVT has dropped below 50, and we'll see if this produces some sort of recovery in the future. Another valuation technique in the crypto asset space is known as the equation of exchange. Now, in economics, this is known as the quantity theory of money. But as proposed to the crypto space was done by a guy named Chris Burnitzky. Now, the equation of exchange essentially is simple. MV equals PQ. And that stands for money times velocity equals price level times quantity. And let me break this down really simple. This is an accounting identity that says what is bought must equal what is sold. So when we talk about equation of exchange, there's one function or parameter that we're really not still sure of, and that's what is velocity. So velocity means how much a unit of account or a dollar turns over a given time period. Let me explain. In the US markets with the US dollar, we have a velocity of about a little over 5. Now we know in the US markets with the dollar, you can't spend it as quickly as you can spend things online in the digital space. So crypto velocity is widely understood, and in order to understand this equation of exchange, you have to make some pretty big assumptions. But let me walk you through this to see how it could possibly be something that values how much a crypto asset is worth. Now, I gave you MV equals PQ, that's money base times velocity equals the price of money times the quantity needed. So let me go over this. In the US system, we have an asset base of about 4 trillion in US dollars, and times that by a velocity of about 5 and this is equal to our GDP. So our GDP in the US is about 20 trillion. So 4 trillion here times velocity of 5 gives you 20 trillion. Now, how do you measure the value of Bitcoin? Well, you have to think of what are some of its use cases that we can apply to an equation of exchange. And we know the world remittance market is about 500 billion. And let's say Bitcoin were to take about 50 billion out of the global remittance market. So 50 billion, and it would be how much Bitcoin is needed times its velocity equals 50 billion. And to solve for this, you would take velocity, and let's make the assumption that velocity is the same as the US dollar market, and it's 5. So one use case of Bitcoin means that we need 10 billion of US dollars purely for remittance payments. Now this is also additive, so you can think of other use cases of Bitcoin that you can also add to this. So let's take the gold market. Gold is a $7 trillion market. Perhaps Bitcoin takes up about 10% of the gold market, so that's another 700 billion use case. But gold, the velocity is a lot lower, because when you're holding gold, you're storing it somewhere. You're not freely trading it like you are with remittance payments. So a quick assumption to say is that the velocity, let's say, is 2, and the gold market, which is 10% of 7 trillion, would be 700 billion. So now the Bitcoin needed would give you a $350 billion market cap because you take 700 divided by 2. So this is a simple accounting identity or an equation of exchange that shows a simplified way to value Bitcoin or other crypto assets. So this concludes section 2, crypto valuations. So now you should be able to apply different crypto valuation techniques. You should know how to use metrics to monitor the health of the blockchain system. And you should also understand crypto asset mining.